Bank reconciliation statement is what we are going to, talk about. Now, when we are making a bank reconciliation statement, the assumption is that we have already come up with an adjusted cash book. Because without making an adjusted cash book, we cannot really make a bank reconciliation statement. First of all, we need to put things right in our books, and then we can justify that our books they have been made properly or not. Now, when we are basically talking about making of bank reconciliation statement, the starting point is basically going to be something which is the outcome of an adjusted cash book. So the adjusted cash book balance is either going to be a debit balance or it is going to be a credit balance. So assuming we start with the debit balance, which is normally the case because cash being an asset or bank account being an asset is normally going to possess a debit balance. So that debit balance is usually the starting point. After that, usually we are going to have two more items which are either going to be added or they are going to be subtracted. We are going to have unpresented checks at our disposal, or we are going to have uncredited checks at our disposal. Now, when we are talking about these two different types of checks, unpresented checks are the checks which have been given by the business to its suppliers and they are unable to draw money from the bank account. They are unable to present those checks to the bank account. So obviously the money has not been taken out from the bank. So it means that there is more cash in the bank than there should have been. So unpresented checks are debit in nature for that very reason, because they have increased our asset. It should have been decreased, but it is not decreasing because of the fact that those checks which were given by the business to the suppliers, the suppliers have been they have not been able to draw the money from the bank. So unpresented checks are debit in nature. So if we are starting with the debit balance of adjusted cash book, unpresented checks are going to be added because they have a debit balance as well. On the other hand, if we are starting with a credit balance or an overdrawn balance of cash book, in that case, unpresented checks being debit in nature are going to be subtracted from it. But because 99 times out of 100 we are going to have a debit balance, so unpresented checks being debit in nature are going to be added. Uncredited checks, on the other hand, are the checks that have been received by business through its customers or through other ways, and those checks they have either not been deposited by the business into the bank, or the bank is not able to clear them in time. That is why they are sometimes called uncleared checks. So the uncleared checks, they are credit in nature because the money should have increased in the bank account, but it did not increase because of various reasons. Either the money is still in transit, or the money, the checks have not been deposited by the business into the bank. So whatever the reason is, there is going to be less asset available at the disposal of business. That is why uncredited checks are credit in nature. So if we are starting with a debit balance of adjusted cash book, we add we subtract uncredited checks and we add the other type of checks, which is what you call as unpresented checks. So unpresented checks are added to the debit balance, uncredited checks are subtracted from the debit balance, and we arrive at a balance which is called balance as per bank statement. Now, balance as per bank statement is the complete opposite of the balance as per cash book, because in cash book whatever is our asset is in the bank statement it is going to be a liability, because the bank is supposed to pay back the money back to the business. So because it is obligated to pay back the money, that is why it has a liability against business. That is why whatever is an asset for the business is a liability for the bank in this case while making the bank reconciliation statement. So if we started with a debit balance of 1000 and unpresented checks were 900, so we had a total of 1900 debit, and then we took away 300 uncredited checks, we ended with a balance of 1600. Now if we have to record it as a cash book balance will be recorded as 1600, but we are ending the bank reconciliation statement as balance as per bank statement. So whatever is a debit balance for the cash book is going to become a credit balance for the bank statement. I hope you have understood everything. You are more than welcome to give out your questions, and I'll be there to answer your questions as well. Thank you.